Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to be looking at the weekly forecast, and we're going to start off from the dollar index, but we're going to start that from the monthly time frame. So here's the dollar index, and this is the monthly time frame in the dollar index. What we can see is that the long-term directional bias is the fact that we're seeing bearish delivery, and this is the last swing high point that price printed, which sponsored this bearish movement that took out this low point. But now we can see we have a pullback bullish structure to the upside back into this high point that sponsored the bearish movement that took out this low points. So we can see after the mitigation of a sponsorship reference point here, price gave a bearish movement, and what we can see from the pullback delivery is the bullish structure, because this is the low. The price printed a bullish delivery, and then we have price to cut this high point, a pullback, and then another bullish delivery, price to cut this high points. So we can see that we had a pullback here before a bullish impulsive movement that took out this high. So we had this unmitigated week as a reference point, a point of interest. So we can see clearly that the month of July traded into our reference points. If you guys have been following us from last year, you would see that we've been making this forecast available on a weekly basis, but there are times we get to miss 1 or 2 weeks. So what we can see, the month of July traded into the reference point, and we had bullish movement of price to the upside. So what we can see is this accumulation phase, and then price traded bullish to the bearish zone, and then we had this bearish impulse. So we have the accumulation, the manipulation, and then we have this displacement, which is a distribution to the downside into the monthly bullish reference point, because there's the pullback before the bullish impulse that took out this high. So we are to anticipate a reaction from that, a bullish reaction, and clearly we can see the bullish reaction from that. So here is a bullish order block from the monthly time frame, which is now going to serve as a bearish breaker, because this is the last sell candle before the bullish movement that took out this buy side liquidity, and now we have bearish displacement to the downside that broke through that monthly bullish order block. So it's going to serve as a monthly bearish breaker to give us the possibility of further bearish continuation to the downside, since what we can see is that the major bias is bearish, because this is the high that printed this low, breaking this previous low point. Price have returned to the high, mitigating the reference points here, and a bearish delivery, though we can see we have bullish structure here to the upside. So what we can now see is the fact that the previous month, which is last month, which is the months of September, took out sell side liquidity, mitigating the monthly reference point the second time after the mitigation in the month of July. So we can see sell side liquidity taken, and then bullish rejection to the upside. Volume failed to close below this volume, neither close below the low of this delivery, the first mitigation of the monthly reference points. And now we have volume traded above and closed above this particular level and also the low points. So we can see sell side taking. The next anticipation is the possibility to see what buy side taking, since we're seeing bullish rejection to the upside. So you can see this is already the delivery thus far in the month of October. The monthly candle in the month of October have not been fully established yet. So we could see the possibility that price may draw to the buy side liquidity. And then what we have above the buy side liquidity is the bearish breaker. So we may see price react from the bearish breaker and give us a reason to continue bearish to the downside. Or we could see then price may further trade higher to the next draw on liquidity, which is this monthly bearish fair value gap. So clearly this is just the narrative from the monthly time frame. Let's look at the weekly time frame, guys. Here in the weekly time frame, what you can clearly see is within the monthly reference point, we had a weekly bullish fair value gap in which price mitigated the first time, and then we had this bullish reaction to the upside. And you know, we called out this bullish expectation because we had relatively equal high here, buy side liquidity resting here, and then we anticipated that to see price was going to take that. So what we can now see is price traded bearish again to the downside and mitigated the zone the second time, and taking out sell side liquidity, price gave bullish rejection to the upside. Volume closed above the volume of this down close candle before this bullish movement, and also the swing low points. And then the next weekly candle gave us a bullish delivery. So you know, 2 weeks ago I told us to anticipate to see how price was going to trade bullish to the upside to take out this trend line liquidity. And what we can see is that price traded back into this key level, and then we can see the bullish continuation which happened last week, and then we had price took out all of this trend line liquidity, which are basically the buy side liquidity. So from the weekly time frame here, we really do not have a point of interest to anticipate that this may just continue bearish to the downside. So looking at the fact that sell side has been taken and this trend line buy side liquidity have been taken, since we can see volume candle here, our anticipation is a possibility that price may continue bullish to take out this buy side liquidity resting here. Because what we have above that buy side liquidity here in the weekly time frame, we have this rejection block level unmitigated, which is now in confluence to the monthly bearish breaker block zone we identify. So you can see reason why we may anticipate to see the possibility of bullishness to the upside, but I'm not saying we're strongly bullish. Looking at the fact that we are having more of bearish volume to the downside, which we can also see in the weekly time frame. You can see bearish impulsive movement, deliveries, candles to the downside. So from the weekly time frame, if we are anticipating bullish continuation, here we have this bullish order block from the weekly time frame. Price traded into that, but then that did not hold price to continue bullish. Price traded to the downside, and now price have returned trading above that. So that may act as a reclaim block. And in reference also to that, we have a sell candle before a bullish movement here that closed above this high, taking out all of this buy side liquidity. So we'll be looking forward to see the possibility that price may retrace to the downside, react at the reclaim block, or price may dip more lower to this weekly bullish order block, and then we have the reason to continue bullish to the upside into this rejection block level here in the weekly time frame. So this is the anticipation in the weekly time frame. Whatsoever violates this delivery, not to give us a reason to continue bullish to the upside, then this is what we'll be looking forward to see, that we may have price just continue to the downside. The violation of this bullish order block here in the weekly time frame would then give us a reason to want to continue bearish to the downside. So this is the narrative I have to show us from the weekly time frame. Let's check the daily time frame, guys. So here in the daily time frame, what we are going to see, basically due to the narrative we've seen from the weekly time frame and from the monthly, a sweep of this sell side liquidity, bullish movement of price to the upside. So last 2 weeks we anticipated the reaction from the sell movement before the bullish movement here, so that we can continue bullish to the upside, and clearly we can see a pullback to the downside, and then that bullish delivery into this fair value gap. If you can remember, I said we want to trade bullish to this fair value gap, considering that we have trend line liquidity resting here. So clearly you can see a breakout and then a return to retest, and then we have the bullish continuation to the upside. Don't forget, this is the reclaim block level marked from the weekly time frame here in the daily time frame. So what we can see in the daily time frame is this is our sell movement before the bullish movement of price that took out this trend line liquidity. So what we can see is this is an institutional order flow. So within the weekly bullish order block that we map, we have this liquidity void. So that is to tell us that if price possibly is not going to react at the reclaim block, then this may be a reason for price to want to dip more lower before a bullish reason to the upside to take out our buy side liquidity. Not forgetting that we have this bearish order block resting here, which may give a resistance to price to continue strongly to the upside to take out the buy side liquidity. So we may see a reaction here. So what we have now is the fact that price is reacting from this fair value gap and the low of this up close candle before we had this bearish movement to the downside. So what we'll be looking forward to from the daily time frame is the possibility to see that price is going to continue bearish, and then we have a reason to look forward to a buy model from this level to see how price is going to continue bullish to the upside. And first, you want to trade bullish first to this bearish order block, the volume of it, because price may react from there a little before we continue bullish to the upside into the rejection block we identified from the weekly time frame, which is in confluence to the monthly bearish breaker. Here we can see, we have this up close candle before this bearish movement that took out this low points, a pullback, and then price continued to cut this low points. So if price doesn't react here and decides to dip more lower due to this liquidity gap here, then we have that level to look forward to for a reason to anticipate the possibility that price will continue bullish to the upside. Whatsoever violates this weekly zone, looking at the fact I've shown you that from the weekly time frame, that is what would now give us a reason to anticipate bearish continuation to the downside. So this is what I have to show us in the daily time frame. Let's look at the 4-hour time frame. Here in the 4-hour time frame, just as you guys have seen in the weekly time frame, here also in the 4-hour we have this liquidity void. We can see the level where we marked the reclaim block. Here also is an institutional order flow, a violated bearish order block. Here price reacted from it anyway, gave bearish movement, but then price continued bullish to the upside. So we have sell side liquidity resting here, so we could see price continue bearish. Then we have to look for a buy model from this level to want to see how price will continue bullish to the upside. So you'll be targeting to trade to the bearish order block here, because that may give a reaction before price continues to take the buy side liquidity. So what we can see is that price is reacting from the breaker here, because this is the sell movement before the buy movement, seek buy side liquidity, displacement to the downside, breaking that level. So price traded back to it, reacting from it. So we may see that sponsor more bearishness to the downside to this institutional order flow, and we may see bullish reason to the upside. So we have this liquidity gap. If price decides then to dip more lower, then we would expect to see price deep into that, and then we look forward to the possibility of a bullish reason. So from the weekly time frame, I showed us that the violation of this zone would now determine that we're going to continue bearish to the downside. So this is what I have to show us in the dollar index, guys. So should in case price doesn't just continue bearish immediately and price wants to react from this bullish block, then we may see this possibility price return here, and then you have the bearish reason to anticipate your bullish possibility to the upside. So this is what I have to show us in dollar index. Let's check out the Euro USD pair, guys. This is Euro USD, and this is the monthly time frame. What we can clearly see from Euro USD is we had the bullish impulse to the upside violating the sponsorship block. Price here created accumulation just the way we also saw in the dollar index. Now we had the manipulation to the downside where price took the sell side liquidity, mitigating this monthly bullish fair value gap and a bullish impulse that broke above this high. So price have traded into this monthly bearish fair value gap, taking out this equal highs, basically the buy side liquidity, and now we can see a reaction to the downside. So what we can see is this is the last up close candle before the bearish movements that give us the manipulative phase, taking out sell side liquidity, mitigation of the fair value gap here, and the bullish reason to the upside. So this is going to act as a bullish breaker, and what we can clearly see is price traded above that. We have this single monthly candle that retested that, continued bullish into this monthly bearish fair value gap. So what we can see from the monthly time frame here in Euro USD is the mitigation of this, and then volume closed below this high point and also below the volume of this candles. So we are seeing the possibility that price may continue bearish to take out this sell side liquidity, mitigating this key level that wasn't mitigated. And if price is going to continue bearish to the downside, we are looking at the breaker here, and then we are also looking at this monthly bullish fair value gap. But our first aim and target will be to see price trade into this level if we're going to see continuous bearishness to the downside after the mitigation of this monthly fair value gap, and looking at the fact that the month of September gave us a bearish rejection to the downside. So we may see the month of October continue bearish to the downside to take out this sell side liquidity. But what we must also pay attention to is the fact that we are seeing this bullish momentum to the upside. But we can see that price return into an unmitigated zone, because we have, this is the pullback to the upside that's mitigated this bearish order block and then sponsored bearishness to the downside that broke this low point. So we may find reason or see a reason that price would want to respect this and give the possibility of bearish reaction to the downside. This is just the narrative from the monthly time frame. Looking at the delivery thus far in the monthly time frame, price took sell side liquidity, bullish reason back into a sponsorship zone here. So we may see reaction to the downside to take a sell side liquidity before the possibility of a bullish continuation, or we may see price continues bearish to the downside. Let's look at that from the weekly time frame. So here in the weekly time frame, what we can clearly see from the weekly time frame is the push of price to the upside. Price mitigated the monthly bearish fair value gap, and now we can see bearish rejection to the downside. And you guys clearly know I told us to anticipate to see bearish continuation to the downside. That was last 2 weeks, because last week there wasn't a forecast. So from the weekly time frame, what we can see is last week delivery gave us this movement to the downside, and we can see volume traded below this sell candle before the bullish movement here that took out buy side liquidity before the bearish rejection to the downside. So we can see that price mitigated this level already, because we can see all of this candle wicks traded below the volume of this down close candle and also this up close candle. So price traded below that. We can see those wicks. So it means this level has been mitigated. Clearly, when you change that to a line graph, you can see that. So this is a low point, and back to the candlestick, we can see the wicks here mitigated that. And now what we can see is bullish push to the upside into the monthly bearish fair value gap and a bearish rejection to the downside. So I'll be looking forward to see the possibility that we'll see price trades higher to mitigate this level, and then we may find price continues bearish to the downside. We'll be looking forward to see price seek this sell side liquidity, in extension this sell side liquidity, except price decides to do otherwise, and then we have the delivery next week continues possibly bullish to the upside, looking at this bullish deliveries, and then price violates this bearish order block. Then that is when we can start considering the possibility of higher prices in Euro USD. But looking at the delivery now, from the reaction from the monthly bearish fair value gap, we're looking forward to the possibility that price may continue bearish to the downside. So if this narrative fails, then we'll be looking forward to this narrative to the upside. That would be price violating this bearish order block. So that will validate a reason to now want to consider the possibility that coming weeks we may have price continue bullish to the upside. So this is what I have to show us from the weekly time frame. We're going to look at the daily time frame here in Euro USD. So let's get to the daily time frame. Here in the daily time frame, what we can clearly see is reaction from the monthly zone, and we had a fall to the downside. Price again pull back into this unmitigated candle week, and then we had a fall. So last 2 weeks I told us to anticipate to see how we want to sell from this fair value gap in confluence to this mitigation block, and we can see price traded back into that, and last week gave us the full delivery of a bearish movement to the downside. And we're looking forward to see price trades into this fair value gap here in the daily time frame. So what we can see now is we have here an inversion fair value gap, because this is a bullish fair value gap. Price return mitigated that and went bullish to the upside. So what we can see again is that price return the second time, mitigation at this block, and then bullish reason to come to our bearish fair value gap for the bearish fall to the downside. So looking at that, this is going to serve as an inversion fair value gap. Though we have that, yes, this held price, the fair value gap held price and gave us bullish reason, but now price have traded below that fair value gap that was respected. And what we can now see is reaction from this bearish fair value gap, bearish fall to the downside. So we can see that the level we marked from the weekly time frame, basically the bearish order block. Let's check the weekly time frame. So we can see this is the bearish order block, because this is an engulfing candle. So clearly we can see then this is the sell movement before the bullish that took out the buy side. So in confluence is a breaker. So you can see that level here in the daily time frame is in confluence to this fair value gap, and clearly we have a bearish order block that price violated to the upside. You can see this is an engulfing candle, so this may act as a reclaim block, and then we can see price continues bearish to the downside. So from the daily time frame, I'm looking forward to the possibility that price will trade to this zone, and then look forward to see price gives us a sell model to want to continue bearish to the downside, and want to trade bearish into this candle here first. Want to trade to the high here, and in extension we could trade to this open close price level before we aim for the sell side liquidity to the weekly level we have here to the downside here. So whatsoever violates this zone and in extension violates this bearish order block, then we're going to see bullish continuation to the upside. What do I mean? If price trades bullish strongly and we see volume trades above this and failing to possibly react from this bearish order block and we see price continues bullish, then we'll be expecting to see the possibility of a pullback and then bullish continuation to the upside. So this is what I have to show us from the daily time frame in the EURUSD pair. So you can see if this delivery happens in the EURUSD in confluence to what we saw in the dollar, so it means the dollar will be bullish. So if this gets violated and we start seeing higher prices, then we should know that we're going to have the reverse in the dollar index. So let's check the 4-hour time frame in the EURUSD pair. So what we can see in the 4-hour time frame clearly is we have price give us bearish reason, return to this sell candle before the bullish movement. This sell candle before this bullish movement that took out this high in confluence is a fair value gap, and then we had bullish reaction from it. So what we can see is a bearish order block here in the 4-hour time frame. So we'll be looking forward to see that price may give a little bearish reaction here, and then we have price possibly fall to continue to this higher time frame level to give us a sell model to continue bearish to the downside. So this is what I'll be looking forward to see the possibility in the EURUSD. So you can see that level we marked from the weekly time frame, basically the breakout level, which is in confluence to the weekly bearish order block. We can see in the 4-hour we have a fair value gap still left here. So this may attract price to the upside, and you know that we're entering into a new week, so price may want to seek this as a buy side liquidity, want to seek the Wednesday high points and then trade into this higher time frame level or zone, and then we have the bearish continuation. So this is what I'll be looking forward to see in the EURUSD, except possibly price respect this and then continues bearish. But I'm looking forward to the possibility that this will be violated. Price will consider this as a buy side liquidity and then into the higher time frame block level, and then we have the bearish continuation. So the violation of this would now lead us to the anticipation of a bullish reason to start aiming to see how price would take out this high, and in extension this high. But then for now, I'm still expecting bearish reason in the EURUSD pair. So this is what I have to show us in EURUSD. Let's check out the GBPUSD pair, guys. Here in GBPUSD, what we can see is that price have traded into this key level. So we can see this is the swing high that sponsored this bearish impulse that took out this low points. Price traded bullish as a pullback reason to the upside, returning back into this buy move before the sell move. Price mitigated that, and we can see bearish reason to the downside. So price is reacting at this breaker because this is the bearish order block that sponsored bearish movement that took out sell side liquidity, but then we had this bullish impulse that violated that. So price reacting from a supply back to a demand in the form of a breaker, which is the bullish breaker. So we have an engulfing candle here. So what we can see here, we have equal lows and a fair value gap resting to the downside. Mitigation from a supply level, an engulfing candle, price traded bullish but failed to continue bullish to take this out. Now we can see the month of September traded bullish to the upside, but then volume closed below the high of this previous candle, failed to continue bullish to take out this high point. So we are expecting the possibility now, looking at it, that buy side has been taken, so we may see price straight to the downside to take out this sell side into this fair value gap. And we can clearly see that the month of October thus far is respecting this key level. So let's check the weekly time frame. In the weekly time frame, what we can clearly see is reaction from the monthly supply level. Price traded bearish to the downside, violating this bullish order block, basically giving us a change in state of delivery. Price pull back to this rejection block and then bearish reason. So you know, last month I told us to anticipate a pullback into this bearish order block for a bearish continuation to the downside into this key level. Thus far now we've seen the fulfillment of that delivery. Now we can see that last week closed below this bullish candle. So therefore, from the narrative we're seeing now in the weekly time frame in GBPUSD, my expectation is to see the possibility of a bullish reaction to the upside, and then we have the continuation bearish to the downside. So this is what I'll be looking forward to see in GBPUSD. price took out buy side liquidity, mitigation of this key level, bearish rejection, creating a bearish order block in the weekly time frame. Price return mitigated that, bearish fall again to this key level. So hence why we are having a reaction bullish to the upside, which may give us bullish reason to mitigate the newly created bearish order block for a bearish continuation to the downside. So we'll be looking forward to this narrative, except this gets violated and then we have strong bullishness to the upside that violates this. Then coming weeks we'll begin to look at the possibility of bullishness to the upside. But thus far, this is what I'll be looking forward to in GBPUSD. Let's check the daily time frame. Here in the daily time frame, in respect to the levels we've marked from the weekly, we can see price mitigated this. We had a sell movement before the buy move, took out buy side, fell, taking this low. So what we can see, price pushed to the upside, seeking this buy side's liquidity, and then the fall of price to the downside. So you can see in confluence to this bearish order block, we have this bearish reclaim block, because this is an engulfing candle that we anticipated the possibility that price may react from it and then go bearish, but then you can see that was violated. So price did not respect the engulfing candle here, and when price traded below that, returning, we're expecting that to reclaim price to further send price to the downside. And then you can see that is in confluence with a bearish order block, a newly created bearish order block. So you can see the reaction and then bearish fall. So what we have here is a sell movement before a buy movement that failed to continue bullish. Price fell, changing the state to a bearish narrative to look forward to sell side taken. Level mark from the weekly facing bullish reaction. So we're looking forward to see how price will trade into this level. We have unmitigated week here, also this unmitigated week. So price may seek this candle high here, and then we have the possibility to expect bearish continuation to the downside. So this is also the narrative in GBPUSD here in the daily time frame. Let's drop to the 4-hour time frame and look at the narrative in the 4-hour time frame. In the 4-hour time frame, clearly we can see the reaction from that level we marked from the weekly, and we can see strong bullish push to the upside. You know, I expected to see the bearish continuation from this fair value gap, expecting to see that this movement was going to trade higher, and then London will mitigate the fair value gap to give us bearish reaction. But then price traded and then London just went bearish from this level, failing to push more higher before the London session, before we can anticipate a bearish fall. So price just maintained a form of slow volume or low volume movement here, and then London began and then fell to the downside. This was sponsored during New York. So what we can see is that price is reacting at this bearish order block. But since we are entering into a new week, we may see the possibility that price may violate this and seek this as a buy side liquidity. Price may not necessarily fully respect this. Either we see price may give a reaction back to this fair value gap and then trades to seek this buy side liquidity before we now have a reason to continue bearish to the downside. Or we could see price then seek the buy side into a higher time frame zone we identify, and then we have the bearish continuation to the downside. So this is my anticipation in the GBPUSD, except there is a violation of the weekly bearish order block. Then we can now look to the coming weeks to give us the possibility of bullish continuation. So we're looking at this zone here in confluence to the level we saw from the daily that we had a change in state of delivery. So you know, within this zone here, you can see we have a fair value gap. So price may react here, seeking the buy side, and then continue bearish to the downside. The push of price higher would be to mitigate this rejection block we have here, and then continue bearish to the downside. So this is what I have to show us in GBPUSD. Should, in case price doesn't respect this bearish order block, to possibly continue strongly bearish to the downside. And if price decides to respect this, we may see reaction here to go bullish, seeking the previous weekly delivery, and this is actually Thursday's high. So price may seek Thursday's high before we continue bearish to the downside. So this is my narrative in GBPUSD, except otherwise. So let's check out the gold pair, guys. What we can clearly see in gold is that gold has been giving us new all-time highs. Gold has been trading bullish to the upside. So this is the weekly time frame. Since from last year, we've been having bullish narrative in gold. After gold broke out of this consolidation, price just continued bullish to the upside, creating new all-time highs. So what we have is this weekly bullish fair value gap. It means if we're going to have a fall of price to the downside, then we're looking forward to this weekly bullish fair value gap. But if you look at price delivery thus far, you would see that price has been creating series of fair value gap, and price never returned to them before continuing bullish. So price is respecting sponsorship block in lower time frame, the fair value gaps or the other blocks in the lower time frame, and then continuing bullish, creating new all-time high points. So let's check the daily time frame. In the daily time frame, what we can clearly see is this is the weekly bullish fair value gap zone. So it means if gold is gonna continue bullish to the upside and then giving us a reason to have a pullback from the time frame here we are in, which is the daily time frame, we could see gold react from the daily bullish fair value gap zone and gives us a reason to just continue bullish to the upside. Except price doesn't respect the mean threshold of the daily bullish fair value gap, then we may anticipate the possibility that price will now fall into the weekly fair value gap before giving us the possibility of the bullish continuation to the upside. So what we can now see clearly now from the daily time frame here is the delivery thus far that price traded bearish after creating the new all-time high above the 4,000 price level. Price traded bearish to the downside, but then price did not return into this fair value gap. What you can see is that price reacted at the most recent fair value gap and then traded to the upside. So it means if we have the possibility that price may not dip lower, since we can see that gold has just been going bullish, then we'll be waiting to see how volume is going to trade above this. If volume strongly close above this, then we might anticipate a pullback to then continue bullish to the upside. Looking at the fact that gold reacted and then we have bullish reason here, because we can see the push to the downside, price reacted from this fair value gap and then volume closed within the fair value gap, and then the next candle, which is Friday's candle, just went bullish to the upside. So it means that price has the possibility to just continue bullish from this mitigation of this bullish fair value gap, since we know that gold is just extremely bullish. So it means if we don't have a reason to see gold continue bearish to this daily and the possibility of the weekly, then we could just see the bullish continuation from this price delivery. Let's check the 4-hour time frame, and then we may also look at the 1-hour time frame to look at the possibilities we have. So here in the 4-hour time frame, what you can clearly see is the fact that this is the weekly bullish fair value gap zone, and here we have the sell movement that took out liquidity here before the bullish movement that broke here. So it means if price is going to possibly give us a reason to go bearish, then we'll be aiming to see price dips to the weekly or to the daily fair value gap. And the daily fair value gap, we can see we also have a 4-hour fair value gap within the daily fair value gap zone. But now you know we are bullish. Price respected this rejection block level, and then price just went to the upside. Now we had a pullback, price returned to mitigate the sell movement before this buy movement, and then price is giving us bullish reason. So if we see the possibility that price is going to continue bullish, meaning we may see the tendency that we could have a pullback, and then we want to look at the model price will form here in lower time frame. Since we know gold is bullish, if price gives us a buy reason, they'll want to buy gold and then continue bullish to the upside, or gold may trade to the upside into this unmitigated week and then give a bearish reason to the downside. Then you have to wait to see if price is going to form a buy model here for you to continue bullish to the upside, or gold may now trade into this, give a sell model, and then we have the possibility that gold may now fall to the downside. But looking at the fact that gold is bullish, would want to work with this narrative. Looking at what forms here, if price violates this level here, this sell candle before the bullish movement here, then we know that we start looking forward to bearish reason to the downside. But for now, flowing with the buyers, we are bullish. So price here may trade into this unmitigated candle week and then give us a bearish reason to this sell movement before the buy movement to possibly print a bullish reason to continue bullish. The violation of this then would now give us a reason to want to go bearish to the daily fair value gap, and before we may see price want to mitigate the weekly and then a possible reversal to continue bullish. Let's check the 1 hour time frame. Here in the 1 hour time frame, what you can clearly see is the fact that Price came here, you can see we have a bullish order block. Price mitigated that, pushed to the outside. Price failed to continue bearish to create a new low. This is the lowest low. Price went bullish, market structure shift, return, mitigation of the sell movement before the buy movement that took out this high. Price went bullish, reacting at this bearish order block because yes, a flip zone because we had demand, price created supply. So price may react here to give us bearish reason, and then we may see price continues bullish to the upside, or price may just consider this as a buy side liquidity, take this out, mitigate this, and give a bearish reaction for a mitigation back into this for a bullish reason to the upside. So this is what I'm just looking forward to seeing gold. It is either we see price respect this bearish order block and then force to the downside to give us a buy model to continue bullish, or we may see price trade into this bearish block and then we have a bearish reaction to the bullish block before we have bullish continuation. So the violation of this zone would now build a fact and a reason for us to now start expecting the possibility that price will fall into the daily fair value gap. So in the 1 hour time frame here, within the daily fair value gap is a bullish block here. So this may be the target if we see price violate this and wants to continue bearish to the downside. So this is my expectation in gold. Yeah, so this is what I'll be looking forward to. So price created a new time high, price pullback, failed to take that displacement to the downside. So we may see reaction here for a bearish reason. If price violates this bullish zone, then that is when we can be bearish to the downside. So this is what I have to show us in gold, guys. Let's check out the next pair. This is AUDUSD from the monthly time frame. What we can see from the monthly time frame is a bearish narrative to the downside. So price traded to the upside back into this level. This is a Quasimodo level because here we have the sell movement before the buy movement that took out the high and also took out this high point. Now price traded to the downside, breaking the low in extension, breaking this low. We can see how volume closed below that. Price violated this bullish order block, which is now giving us the possibility to serve as a bearish breaker. When you change that to the line graph, you're going to see that that is actually a Quasimodo model because you can see a fall or push to the upside. Now price fell, took out this low point, also took out this low point. So we may see the possibility that price may continue bearish. So this is the month of October. The candle is still being established. Price took out what buy side liquidity in the month of September and volume closed below that. So we could see bearish possibility in AUDUSD. But then let's look at the weekly time frame to look at that narrative from the weekly time frame. So in the weekly time frame here, we have the sell movement before the buy movement that took out buy side, took out this buy side mitigation at this candle week, and now bearish fall to the downside. So what we can see is the mitigation and then bearish movement of price to the downside. Price gave us a bullish reason, but then failed to continue bullish, take out this high. And now what we can see last week gave us strong bearishness to the downside. So for the coming week, we'll be looking forward to the possibility that we may have bullish reaction to continue bearish to the downside, seeking the sell side liquidity. We have the sell side liquidity. In extension, we could see price further fall into the sell side liquidity. So this is what we can see from the weekly time frame in AUDUSD. Let's look at the daily time frame. In the daily time frame here, what we can see is looking at the level mark from the weekly. You can see that level here, which is an open close price. Here we have this violated bullish order block because price mitigated this bullish order block. This sponsored the bullish movement that took out this high. Price return mitigated that, push to the upside, but failed to continue bullish to take this high. Price now gave us bearish impulse to the downside, violating the bullish order block. So you can clearly see that here we had this engulfing candle. Price return mitigated that bearish impulse to the downside. So this is a violated bullish order block, which may serve as a breaker because this sponsored the movement that took out this high points. So price may not necessarily have to dip higher into this candle on mitigated week, or what we call the open close price, which also serve as key level. So we have that there. So this is a key level because in lower time frame we may see the possibility of a bearish order block. So here we have this violated bullish order block, which may serve as a breaker. So we could see price just possibly return to the upside into this zone here, and then we could see bearish continuation to the downside. This could be a target for profits taken because we may see a little bullish reaction before we have the bearish continuation to the downside. So this is what I'll be looking forward to in AUDUSD from the daily time frame, except price decide to push more higher into this key level, the open close price, before we have the bearish continuation. Let's look at the 4-hour time frame. In the 4-hour time frame, what we can see is the reaction from the daily bullish order block. They gave us this bullish movement that failed to continue bullish to take out this high. Price reacted from this rejection block, bearish reason to the downside. Price respected the bearish order block, which we saw from the daily time frame, and then bearish impulse. Price has broken through this low, a rejection block here. So what we can see is bearish impulse. So this may reclaim price, and then we have bearish continuation since it is in confluence to the violated bullish order block. So this is basically what I mean. It is either we see price straight here, and then we have bearish continuation, or price now may seek this high, which is Thursday's high point, since we have this unmitigated bearish block here. So we could see price seek that before we have the bearish continuation to the downside in the AUDUSD. But here we actually have a strong bearish volume. So I'll be looking forward to this possibility. If price is going to give us a sell model in a lower time frame, like the 15-minute time frame, then we'd want to sell from this to continue bearish to the downside. But if that is not printed, then price may seek the buy side to mitigate this sponsorship block to continue bearish to the downside. So this is my narrative in the AUDUSD. So the violation of this bearish block would now mean bullish possibilities to the upside. So let's check out the next pair, guys. Before we look at the next focus, I want to introduce to you guys the Smart Money Concept Trading Bible. This is a trading guide that would help traders of all levels, either you're starting out or you've been in the game for a long time. This is going to help you have a better understanding to the Smart Money Concepts trading methodology. So the guide is actually simplified with real-time chart examples and practical schematics with detailed explanation to a lot of concepts in the Smart Money trading concept methodology. So if you want to get a copy of this, or basically I would really recommend that you get a copy for yourself, because this is really going to help you guys. Link to this particular guide is in the description section to this video, and also in the comment section to this particular focus. You can do well to check that out and also look at the details it contains, because you're going to have an understanding about institutional market structure, how to actually identify valid institutional market structure. You're going to look at the PDRAs, you're going to look at the sponsorship candles, you're going to look at institutional entry models, and a lot more, guys. So let's head to the chart to look at the next focus we have. And what we have here is actually the yen basket. This is the weekly time frame. What we can see is a bearish delivery in the yen basket, and overall buyers, we can see that it's in a bearish movement to the downside, and we had this bullish reason, but then price did not break above this high, and then price gave this form of range bound movement from this high to this low, and finally now we're seeing price giving us the possibility of strongly breaking out of this low points. So what you can see in the yen basket is this: we had price printed the sponsorship block, return mitigation, fell to the downside, buy movement, a fall to the downside that broke this low point. So what we can see, when price printed this bullish movement and then a bearish movement that violated this sponsorship level here, we can see a mitigation, and then price continued bearish. So what we can see is that we had a pullback here that swept this buy side liquidity and then bearish impulse. Price returned to mitigate that and then continue to the downside. Price created a buy movement here before continuing bearish, a pullback to that, buy movement before the sell movement, mitigation of that, and now we have bearish movement to the downside. So we can see price have traded into this weekly bullish fair value gap. So price did not really mitigate the volume of this buy movement before the sell movement. Basically, we can see a breakout because this took out this low point. This is the buy movement before the sell movement that took out this low. So what we can see is that we have an engulfing candle here, bearish engulfing candle. So if we're going to see the possibility of bearish continuation, so we could see price now trade, and then this will be our reference point for a mitigation to see the bearish continuation to the downside, to see how price may take out the previous weekly candle sell side liquidity here. So we are still having bearish narrative to the downside than a bullish narrative. It is a violation of this recently printed sponsorship block that would now give us a reason to see the possibility of bullish movement to the upside. But then we are still looking forward to bearish possibility to the downside, since price have not necessarily mitigated the volume of this breaker, which is also in confluence to this fair value gap, though we can see that price traded into the fair value gap. So this is what I have to show us from the weekly time frame in the yen basket. Let's look at the daily time frame. In the daily time frame, what we can see is bearish delivery here to the downside, respecting the bearish sponsorship blocks. We can see buy movement before the sell movement, return mitigation, price fell, price again traded, mitigated this, fell to the downside, price pullback, mitigated this bearish block. You can see a pullback mitigation before falling. Now we had a break of this low, price came back to the bearish block, mitigated that, fell to the downside. Now we have a break here, price pullback, mitigating the buyer movement before the sell movement that took out this low, mitigation. So this is the bearish block we marked from the weekly time frame. In confluence here, we can see here we have a fair value gap. So we are looking forward to the possibility that price would trade higher into this, and then price may give us a sell model to continue bearish to the downside. So in the yen basket, we're looking forward to this possibility. Price will trade into this, and then we'll look forward to sell model in lower time frame. If price prints that, then we want to see how price may now continue bearish to the downside in the yen basket, except price decides to just continue bullish, violating this high points, and then we can start looking to bullish possibility. But for now, we're still bearish in the yen basket. So this is what I have to show us in the yen basket, guys, from the daily time frame. Let's look at what we may see from the 4-hour time frame. So the 4-hour time frame is basically in confluence to also the daily time frame. We have a fair value gap in the daily. We can see that here in the 4-hour. So what do we have here? A bearish order block, which may give us bearish reaction before we could see bullish reason to the outside. Price may seek this as a buy side liquidity and then react from this fair value gap. So clearly now from this fair value gap, we have more reference points within this fair value gap. But then I would want to work with this reference points here, because now here we had the sell movement before this bullish movement that gave us a reason to take out this high point. So if price is going to trade more higher, and we're looking forward to see price respects the fair value gap zone, so we're looking forward to see how this is going to act as a point of interest to want to give us bearish reason to the downside. So until we see that bearish model, we're not going to execute a bearish reason in the yen basket. Basically, in comparison to peers we want to trade that are actually paired with the Japanese yen. So this is what I have to show us in the yen basket. Let's look at the next pair for the weekly forecast. Yen US oil from the weekly time frame. What we're going to see in the crude oil is how price return reacted from this rejection block and gave us bearish reason to the downside, taking this buy side liquidity. Price broke this structure because we had a pullback here that took out this buy side, a strong high. Price return mitigated that bearish movement, break of structure, liquidity taken. So what we can now see is price again gave us a pullback and then took out this buy side and then fell. So we can see a reason for price to push to the upside because price reacted from this bullish order block. Price reacted and pushed and then reacted from the bearish, and now price has broken the bullish block, creating for us here a bearish engulfing candle, a bearish order block, which is a strong bearish order block because it also took out this buy side liquidity. And we can see how price return mitigated that and then fell. So we can see this has been broken. This will serve as a breaker because this sponsored bullish movement that took out buy side liquidity. So for the coming week, we'll be looking to this possibility to see that we have possible reaction to the upside for price to return to mitigate the breaker. In confluence, we have this unmitigated week, and then we can have bearish continuation to the downside. We'll be looking forward to see how price will aim for the sell side liquidity resting here. So this is the narrative from the weekly time frame. If you guys have been following me for a long time now, you would see I give you guys mechanical way to interpreting this price. I help you to understand how you can read price in an unbiased perspective, and also how to then also read price in a more clear biased perspective. So this is what we'll be looking forward in the crude oil. So let's look at the daily time frame. So here in the daily time frame, we can clearly see just the narrative from the weekly reaction from the rejection block. Here you can see we have a bearish order block or a breakout block because you had sell movement before the buy that took out this high and then fell again to the downside. Price took inducement liquidity, price fell, took out buy side, fell again, a pullback. You can see what happened here. This took out buy side before falling to the downside. So should in case we're going to have a deeper pullback, meaning if we do not see price react from here to give us a bearish model to continue bearish to the downside, then we may see price takes out Thursday's high points, which is going to be last week movements within last week. That is the Thursday high. So price may take that as a buy side liquidity, and you can see here we have a fair value gap, and then we have what's our bearish model to have the bearish continuation to the downside. So this is what we may likely see in the US oil. So it means that in confluence to the weekly time frame, we have the breakout level here that was violated, and you can clearly see here we have an institutional order flow and we have this strong bearishness. So if price doesn't react from here to continue bearish, giving us a clear sell model in the 1 hour, 4 hour time frame, they'll be looking forward to see how price will seek this buy side and then gives us the sell model to want to go bearish to the downside. Let's check the 4 hour time frame. Here in the 4 hour time frame, just the way we mark those levels from the higher time frame, we're just going to make reference to them here. So it means if we have price giving us the possibility to trade higher, so basically we have the fair value gap resting here. So price may trade and then we look forward to a sell model to want to have a reason to go bearish. Price may mitigate that breakout block zone. So if price decides to dip more into this level here, so you can see this is a high we marked from the daily, which may serve as a drawn liquidity. But coming to the 4 hour time frame, we can see a fall here, a push. Price took this out and now price has fallen to the downside, taking out this low. So we have this breakout here. So price may just react from the breakout. So from the 4 hour time frame, we should keep our eye at this breakout block zone here. In confluence now, what you can see is we have this supply zone. So I want to look at this. So from the 4 hour, price may not necessarily now take out this buy side, because what you can see is we have this, a push to the downside, taking out sell side liquidity, push to the outside, broke this, but then price came to the downside, violating this. So this is a breakout block, and in confluence is a fair value gap. So if price doesn't react from the weekly breakout block zone, which is in confluence to the weekly unmitigated open close price, you know, this is a movement that created just a candle wick in the weekly time frame. Here in the 4 hour, we can see narrative, candle volume, bodies. So we can see here in confluence here is a fair value gap. So this will be the reference point for the US oil if we see the US oil giving us bullish reason. So we'll look forward to want to have a sell reason here, because price will create structural narrative that would serve as liquidity for price to seek before coming into the POI, and then we have the continuation to the downside, and therefore may not necessarily seek this high point as a buy side liquidity. So this is what I have to show us in crude oil, guys. Here in USDJPY from the weekly time frame, what we can clearly see is that USDJPY printed this high point here after breaking this high here. So we had a pullback that took out sell side liquidity, and what we can see is that price since then failed to trade higher to take out the external range. So price has been trading within this range, this high and then this low points. So we can see price traded to the upside, now return to the downside, failing to take out the low. Now price side giving us this bullish narrative to the upside, and here we had the last bullish narrative because price broke out of this and then returned to retest. We had this accumulation, manipulation, and now distribution to the upside. So what we can see is that price gave us a sell movement before a buy movement here to the upside. Volume here closed above the volume of this candles here. That is the last buy candle before the sell movement that sponsored the bullish movement to the upside. So from the narrative we are clearly seeing here, I would say we hold more to a bullish side than a bearish side. So we could see price gives a pullback to the downside for us to continue to the upside. So this is what I have to show us in USDJPY from the weekly time frame, let's check the daily time frame to look at the narrative. So here in the daily time frame, what we can see, last 2 weeks I told us about the possibility to see price react from this daily bearish to push price to the downside before we have bullish movement. So now we can see price push to the downside, and we had the bullish reason to the outside, breaking above this high, in extension taking out this high point. Price is reacting at this sponsorship block here. So we'll be looking forward to see how price may trade bearish to the downside. And in confluence, basically, we have the violated bearish order block, which may serve as breaker. And if price decides to dip more lower, then we have this inversion fair value gap, where we may look forward to the possibility of a bullish model to continue bullish to the upside in USDJPY. So here's the narrative from the daily time frame. Let's look at the 4-hour time frame. So in the 4-hour time frame, basically is in reference to the identify zone in the daily and the weekly also. So you can see here we have a fair value gap. This is the daily inversion, which is in confluence with a bullish fair value gap also here in the 4-hour time frame. Here we have the sell movement before this buy. So this may really serve as a sell side liquidity. So price may purge that and then mitigates the inversion fair value gap. So it means if price doesn't react here to give us bullish model to push to the upside, then we may see price dip lower into the inversion fair value gap in confluence to the bullish fair value gap we are seeing here. And then we have the bullish continuation to the upside in USDJPY. So this is just what we have to look forward to in USDJPY, except we have strong bearish reason to the downside, meaning we see just continuous bearish momentum that would violate the zone and then begin to go to the downside. But this is what we're looking forward to see in USDJPY. So guys, this is all I have to show us in USDJPY, and this is all I have to show us for the coming week. So till you see the next video, cheers and God bless you all.